Yeah, okay. We are live again.
So, can you please let us know if you can hear us?
Yes.
Please let us know if you can hear us. I'm gonna check it on my phone.
Yeah. Yeah.
My account. Okay, I think we're live.
We are live, right?
Yeah, very well. Okay, I think we're live.
We are live, right?
Oh, so me, yes, I can hear you. Yay!
Okay, good.
Yeah, so
Thank you. Thank you.
awesome.
Yeah, so we were trying to figure out it's our first live. So sorry guys. I'm glad you came through nonetheless. So you can have our talking points.
Yeah.
Okay.
So is the charger for this?
It's done?
Yep.
Okay. So it's in the pocket there. And
Yeah. Yeah.
yeah, I think what you can do is you can just put it there. Yeah, so yeah, sorry guys. It's our first live together. And yes, we just wanted to make sure you can hear us. So we had to come up with the microphone. We had to connect it actually. So I think we need this light, so that's okay. I'm just going to do this. Okay. Blooming, you can for the meantime just talk to the viewers whilst
Okay.
I'm connecting there.
It's so good to see every one of you here. Thank you so much for joining us. Thank you. We appreciate this. And we're going to be kicking this off in just 60 seconds, okay? 60 seconds. And we're just trying to connect the laptop to power to make sure that we don't run out of battery. Thank you, Somi. No, you didn't miss it. So we're just here. We're about to start this off, okay? And thanks for showing up. Thanks for showing up. Okay, so we should be good to go now.
Great. Thank you so much. And I think the first thing is to just thank you guys for your patience and happy New Year. I hope which part of the world that you are having a great time. And today we are essentially just going to share our outlook for the 2024 investment landscape, basically to just share our insights. So please help me welcome Blooming all the way from Alberta.
I know, all the way from Alberta. I came back to BC, Vancouver. So exciting. So we can't wait. Yes.
Yes. So our presentation is going to be pretty much we have some talking points that we are just going to share with you. And then if you have any questions that you'd like to ask, please just make sure you drop them on the chat and we'll be sure to attend to them. But we will talk about recessions. I think most people, whenever they hear about recession and experts and policymakers talking about it, some people they are so scared about recession. So we are just going to give our thoughts and our analysis as it regards to that, and then we will talk about the specifics of what Blooming and I learned from the investing experiences, particularly in the United States and Canada. But I'm confident that some of the principles they can be applicable to any other part of the world. So I think that's. I hope that's something that you'd be interested to hear. And please put down your comments as well if you want to us to expand more on those points later on. And then we'll talk about things like emergent funds, dollar cost averaging, and then what we think about forecasts and predictions with regards to events like recession, interest rates, and all these other macroeconomic variables. Some people like to call them like swine events, like those things that you can't really predict, like the COVID-19. So we will talk from the point of retail investors to say how can you best take advantage of that, because indeed, from what I have learned over the past 3 years or so in the stock market, in investing in the stock market, there can be indeed good opportunities to make money, because a lot of companies will be trading at very discounted valuations. And then we'll talk about investing in individual companies, individual stocks, and also even index funds. So to get started, I'm also going to allow my co-host here to give a shout out.
Yes. So
Yes.
again, I think Isaac has already pretty much gone over what we're going to be talking about today. This is going to be a very short conversation, and this is just for us to just share with you what we learned in 2023 and where we see opportunities for 2024.
Yes.
So yeah, that's just what we're going to start off with, and we're going to start off with recession. So
Yes. Okay. Thank you. So I think for starters, basically, when we talk of recession, there is one organization in the United States. It's actually a non-profit. It's called the National Bureau of Economic Research, and this is constituted by a team of experts who include economists. And these guys, what they do is they sit down and analyze, specific data points that include real GDP. When you talk about real GDP, this is the total value of goods and services produced in a particular country or in the economy over a given year, let's say 1 year. And then they also analyze the decline in the real income and also the numbers, the employment numbers, and then industrial production. Basically, how are companies, the industry sector, how is it doing? And then the decline in the wholesale sector. So in terms of those things that I highlighted, if there is a market decline for 2 consecutive months, then they can pronounce a recession. So basically, what then happens is that most companies or the economy, let's say if they say there's a recession, in other words, the slowdown in the economy. So what normally happens is companies that don't have strong balance sheets, they might end up cutting their labor force, and some companies actually they go under the hammer. So that's basically a recession, right? But with a recession, then as a retail investor or as an investor in general, I think there can be a great opportunity. Let's say historically, if you look at the data from 1960, particularly in the United States and Canada, there's been, I think, over 33 recession. And this recession, sometimes the economy can be down for like maybe 18 months. The slowest, I think, was during the COVID pandemic. It dropped what is called a bear market. In other words, a decline in the major indexes for at least 20%. So you're looking at the S&P 500, the top 500 companies, the Dow Jones, which mostly constitute the top industrial companies, in the United States. So if this happens, let's say as an investor, how are you going to take advantage of that? So it's going to happen. It can happen. It's an occasional phenomenon. So that's what we think. What do you think about that? How do you prepare yourself for a recession? For me, the first thing, I don't try to forecast to say it's going to happen this time.
yes,
Because again, I don't try to predict the short-term direction of the market. But in my case, I like to have some cash. I like to spend time understanding businesses that I am passionate about, that I check, that check my valuation criteria or my investment criteria. And then I will be just waiting for those opportunities and buy strong businesses like what Warren Buffett likes to do. What do you think, buddy?
yes. So again, A lot of people might think that, oh, the word recession, this has been predicted even last year, 2022. They
Mhm.
said 2023 was going to be a recession, blah, 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 things like that.
Mhm.
But just to put it simply, if just to make sure that we don't complicate things too much,
Mhm.
the simplest thing, just as Isaac has said, even if we're in a down market or in an upward market, the best strategy, just dollar cost average. Because again, it's very, very difficult to predict where the direction of the market in the short term.
Mhm.
We all know that if we look at the performance of the S&P 500
Mhm.
or the Nasdaq or the Dow,
Yeah.
like all of this,
Yeah.
historically they've gone upward. But how can we take advantage of this? It's just by simply dollar cost averaging over time,
Mhm.
irrespective of how the market is doing. I know that the Fed has increased
Interest
interest rate
rates.
for so many times, and now
Yeah.
there's a forecast for 2024 that the Fed might start cutting interest rate.
Yeah.
Irrespective of what the Fed does, I think a good strategy will still be with just dollar cost average over time, irrespective of how the market is doing.
Yeah, and specifically, you'll be dollar cost averaging into the businesses that you understand, and
Mm-hmm.
those um, um, stocks that you particularly understand, or index funds. So that's what I like to do. And you brought in another interesting point about interest rates. Interest rates in Canada, in the US, they've been increasing.
Mm-hmm.
In Canada, they started increasing, I think, in 2022
22,
July,
yes.
by 1% basis point, and then they've been increasing it over time. And
Mm-hmm.
what are your views on that, and also even in the US and other major economies around the world?
Again, like if we just look at how the Fed has been responding to what has been going on in the economy,
Mhm.
if we just backtrack a little bit, let's look
Mhm.
at 2020, COVID hit, interest rate just went down a lot, right? And what happened to people, right? They started
Mhm.
buying a lot of things. The market started getting very, very hot,
Mhm.
overheated, right?
Mhm.
And what did the Fed do? The Fed had to step in to make sure that, okay, inflation can go down. So, but if we look at what if the Fed is trying to do now,
Mhm.
again, just to make sure that we don't complicate things, the simplest thing, irrespective of how the market is going to do, just dollar cost average into strong companies. You won't go wrong. And even if you're like, oh, I'm not really sure what companies to invest in, you can just invest in maybe the index funds, right?
Yeah.
There are different ones that one can even consider. Even though this is not an investment advice or
Mhm.
anything like that, this is only for educational purposes. But again, irrespective of the performance
Yeah.
or the decisions or the moves of the Fed, as an investor, because we're long-term investors, the short-term volatility in the market does not, it doesn't matter, because again we focus on how the economy is going to do in the next 5, 10, 15, 20 years. So if we're going to be betting that the US economy or the Canadian economy is going to go upward, then there's no point in saying that, oh, even if I buy a stock at $120 or at $150, it doesn't matter. In the grand scheme of things, it's still going to eventually go up, provided these are quality companies, or
Mhm.
just even just putting this in an index fund, you will
Mhm.
be fine over time.
Yeah, I think one interesting point is that a lot of fund managers in the US, I
Mm-hmm.
think, over research has been done, and it shows that 75% of the fund managers, they don't beat the index, like the
Right.
S&P 500.
Yep.
So what it means is, if you simply dollar cost average, in other words, invest over time,
Mm-hmm.
put your money in the S&P 500. Usually, it is the ticker name SPY,
SPYS.
and then over time you can be guaranteed to beat 75% of the fund managers. Again, I think it's because sometimes they have to rebalance the portfolio to
Yep.
align with regulators rules and
Mm-hmm.
guidelines, and it may not necessarily be the best. So as a retail investor, what I've learned is that if you even if you buy 2 shares, 3 shares every month, right? Some people, they like to automate.
Mm.
Over time, it's
It's
going
going to add
to
up.
it's going to add up,
Yep.
provided you do your due diligence, you understand where you are investing your money.
Yes.
And I also do due diligence when I'm investing in individual companies. I
Yes.
know you are a Tesla investor, right?
Well, I think I'm a Tesla fan girl. So
Yeah,
yes, I
yeah,
am. I'm in love with Tesla. So, but in a nutshell, let's
yeah,
even say that, because there's something that I want to point out, that I know a lot of people want to invest, or they've not even started investing, or
yeah.
they've just dipped their soul. I said their soul, their toes into investing here and there. What I usually tell people is that even before you start investing, it's important for you to shore up your cash base, meaning you have an emergency fund in
Yeah.
place. Because anytime we're saying that the Fed is going to start cutting interest rate, it means that the economy might start getting shaky. People might start losing their jobs.
Yeah.
And because of those scenarios, even though it has an opposite effect on growth stock, meaning that
Mhm.
usually when the Fed starts cutting interest rate, we tend to see growth stocks start going upward.
Mhm.
But at the same time, it's important to understand that during these scenarios, there's always that tendency for people to lose their jobs, because
Mhm.
again, the economy is shaky. So
Mhm.
even before you say you want to start investing, I always recommend have at least 3 to 6 months living expense. Just put it in a high use service account, because Murphy's law, something bad is always going to happen. But
Mhm.
if you have that cash base, it's going to prevent you from dipping your hands into your investment. I've been in this particular scenario before, that
Mhm.
we had all our money just locked up in investment, and something just came up. And the thing is not even something big, maybe less than $2,000. But because
Mhm.
we've locked up all our money in investment,
Yeah.
we couldn't even just take action. So I'm telling you that even before you invest, you need to have some money set aside for emergency in case something happens, so that you don't go into your portfolio and sell at the wrong time. Again, investing is literally the best way to grow our wealth over
Yeah.
time. But even before then, we need to make sure that we have our emergency funds in place. So
Mhm.
I'll let that go to you.
Yeah, and I think that's a very, very crucial point, because sometimes if you don't have an emergency fund,
Mhm.
and let's say your car breaks down or you lose your job, you have basic living expenses like rent, if you or a mortgage, if you are in a mortgage, right?
Yeah.
So what that means is, let's say the market, as measured by the major indices, is down by 20%.
Mhm.
Most likely, you are going to liquidate
Yep.
for a loss.
Yep.
So what that means is, because you need the money, right? So, but if you have an emergency fund for 6 months,
Yep.
what it means, and you have extra money on the side, it means you can then take advantage of that down turn in the market, and
Mhm.
then invest in quality index funds and individual stocks. But
Yep.
again, it's very important to educate yourself
Mhm.
in the things that you are investing in, because at the end of the day, investing is risky, and it's
Yep.
always good to consult investment advisors or people who have the knowledge. But what I know is, if you go to the bank, they will charge you some fees, and that's okay. I mean, as long as you are comfortable with it. And another thing that I will say is that it's important to understand the power of compound interest.
Yep.
A lot of people, including my friends I talk to, they just don't get started. They think, like, it's like, oh, okay, I'm gonna wait until I have 20,000 saved up, but that's just not gonna happen.
Yeah.
So if you have, let's say, if you educate yourself, if you have, let's say, 1,000 that you want to start, the key thing is, think of a, like you have to have a good broker, right? Basically, that's how you buy shares, or you can go to the bank for a fee. But in Canada or the US, they are brokers, and then you put the money there, and then some people, they start by index funds.
Mhm.
Over the past 30 years, the S&P 500 has retained at least 10%. So what that means is, you can get,
Yep.
10% of
Yep.
your money, versus the inflation, which usually in Canada and the US is about 2%, and that's the
Mhm.
target which the central banks they put. So I think that's a very important thing, at least for me. I don't know if you want to add
Yeah,
on that.
so again, there is also I also want to chip in here that in as much as it's good for us to invest in stocks, one of the first things that I always tell people is you need to first of all educate yourself.
Yeah.
A lot of people jump into investing without first of all educating themselves, meaning you need to know when to buy, when to sell, what kind of companies. Look, what do I look for when I'm trying to invest in either the ETF, or if it's an index fund, or if it's a specific company, what do I need to look for? A lot of people just jump into investing and they
Yeah.
say, oh, somebody told me on YouTube that I should buy this company. My dear, that does not work, because when the market changes and you cannot make an informed decision,
Mhm.
you're going to be left holding the empty bag. So
Yeah.
again, in as much as we are excited about investing, the first thing is to educate yourself. That's why we have Isaac here. That's why you have me here. You can always reach out to us on any of our social media platforms. We offer services like coaching, just guiding you,
Yeah.
showing you step by step on how to take advantage of what is going on in the market. The first step is never to start investing without first educating yourself.
Mhm.
That is the first thing, because again, investing can be very, very risky.
It is risky.
So, but what makes it exciting is when you have somebody that has done it before, that
Mhm.
has made success out of this, and this person can show you this is how to do this. This is how to avoid this. These are things that you need to avoid.
Yeah.
Again, investing is very exciting. This is one of the greatest wealth generating tool in our generation, but it's also important for us to know that the first step is to educate yourself. Either you're investing in stocks, you're investing in crypto,
Mhm.
or even if it's real estate, the first thing, educate yourself.
Yes.
So,
And also, it's not as complicated as I have seen, with high sounding technical, words. And I mean, I don't mean this to disrespect other people, other
yep.
experts.
Mm-hmm.
But what I've also learned over time is that um, what are the things that you look into when you're looking for, an investment to buy?
Yes. So
Yes.
I'm just going to mention one, because again, there's a list of things that you have to look
Hmm.
out for. And I'm going to piggyback from what you shared in the investing group that we have.
Hmm.
So again, yesterday, Isaac shared on our investing WhatsApp group that there's this company called Nicola, right?
Hmm.
And one of the things, one of the first red flags is before you invest in any company, you need to look at the credibility of the leaders.
Yeah.
If you like, go on YouTube, go on, watch their interviews, go on LinkedIn, Google their names, what have they done in the past. You just don't buy a company because they tell you that, oh, we're going to change the world, we're an AI company, we're a technology company. All of those is just BS, it's just bullshit. But if you just again take the time, study who are the people leading this organization, because again, the tone at the top, it really determines what happens throughout the organization.
Hmm.
If somebody has never run an organization
Yeah.
successfully, and now the person is telling me, oh, Blooming, bring your money, I can make you a multimillionaire, my dear, I'm going to say no. I want to see what have you done before, because I want to get comfortable with
Hmm.
what you've done before. It doesn't mean that you can mess up in the future. I mean, we're humans, there's always that possibility. But
Hmm.
before I can part way with my money and invest in a company, one of the first things I look at is the credibility of the leader.
Yeah.
That is, I mean, there are tons of things that I also look at, which is something that I go over in my course. But again, this is something that I look at. Who are the people running this?
Hmm.
Yep.
Yeah, and I will add on that, specifically in the interest of time. So I also look at, like you spoke about the management,
Yep.
and most of the information is available
Yep.
online. But I also look at the services or the product that I'm investing in. For example, if I want to buy, I start by things that I use every day. Like
Mm-hmm.
here we are doing this live. I'm using Microsoft products. I have a computer, and let's say I want to buy online. So that's how I just, or even use the screeners online. But just for simplicity, I look at these things, and then I then look at, are these market leaders in their
Mm-hmm.
particular sector,
Yep.
industry? So think of the motor, automobile sector, for example. when you think of a car manufacturer, which one do you think? Some people may think of Tesla, Toyota, right?
Right.
And then once I do that, I narrow it down, and in addition to the management that you say, I look at the management. Are they giving a good return on my money, right? So I look at the track record, the financials, that is the balance sheet. I look at the cash flows. In the balance sheet, I'll be specifically looking for the long-term debt and the interest rate. And this information is publicly available. And on the cash flow, I'll be looking at the free cash flow. Basically, are they going to pay off their debt? For me, I like to invest in companies that don't have a lot of debt. Again, if things like macroeconomic environment changes, like their interest rates hikes, there is a recession, then they are more likely to be able to weather that off, right? So I then look at that, and it's not complicated. There are a lot of other online platforms to look at the information. And by law in the US, the Security Exchange Commission, they are required to file that information, audited account, so you can go. Then I look at the competitive advantage. Are they the leader? For example, Apple, they are a leader. I think they produce 12% of the smartphone in the world. So what that means is that there are quite a number of companies in that sector. But what advantages do they have? They are well known. They have a lot of money for research and development. They have a good track record. I'm just giving as an example. And I also look at other gurus like Warren Buffett has been investing in Apple, right? And they constitute now 50%, 50.4% of their money is invested in Apple, and their track record is good. So what I then do is, those are some of the things that I look at. And now, most importantly, I now try to understand the valuation of the business. In other words, the intrinsic value. There are a lot of models that are used: the discounted model, the price to earnings. Basically, when investors invest in a business, they are looking to get like a return on their earnings. Like, are the earnings going to increase over time? And that's how the business grows, the cash flows, right? So if it's focused that is going to increase, so that's another way, right? And of course, you have to look at all these factors at the same time. And then what they do is, if it is discounted, let's say there's an event like this, COVID, or there's a too quick, increase in the interest rates. Usually they are discounted at the beginning. I think starting October 2022, the Feds, when they were increasing, the market dropped, including in the US and Canada and other parts of the world. And in January, when we started this year, companies like Google, Meta, they were 20%, 30% down, mostly the tech sector. So what it means, if you had your money on the sideline, it's like manna is dropping from heaven. You then buy those good quality companies. But the key there is, you must understand these businesses. Take your time, way ahead of time. If it means maybe you spend maybe 1 hour or 2 hours a week, understanding some of the things that are highlighted, and many other characteristics, and then you just park your money in there. For me, for index funds, I just say, if there is a drop in the market, like in the mostly the S&P 500, 5%, I buy shares, whether it's one share or two shares, because the brokerage that I use, they don't charge fees for, they are very low, very negligible. But because I'm based in Canada, and mostly my money will be in Canadian, so what I do is I change it to the US dollars using the Nobit and Gambit. And also, just because there's the exchange rate, So what I then do is I then buy at the right time, right? But for index funds, I just dollar cost average over time. Historically, they have always gone up. Most of the, like particularly the S&P 500, you look at the Dow Jones, the old, companies like the industrial. So I think those are some of the things and that I look at. And I think it's just important to educate yourself more importantly before you jump in. I know it's tempting to just, want to get into the market, and, make money. And sometimes it seems like, it's very easy, but I think it's good to control the emotions. Yeah.
Yeah, I think I'm just looking at the time to make sure
Yeah,
that
sure.
so again, I think
Yeah.
basically 2023 has been an amazing year.
Yes, for sure.
Amazing, irrespective of whether there's been rate cuts or the tech stocks, they started booming.
Mm-hmm.
Crypto has been going bananas, like
Mm-hmm.
all of that, irrespective of the direction of the market. 2023 has been an amazing year, and I am very confident in 2024, irrespective of the direction that the Fed is going to go, either the still increase interest rate or hopefully they start cutting interest rate in 2024, which is we hope that that is going to really help the market. But irrespective of that, we keep dollar cost averaging over time and you're going to be good. It's as simple as that.
Mm-hmm.
Even though, like, investing, I tell a lot of people that investing is very, very simple because it's just something that you can just do. But once you understand how it works,
Yeah.
it's just an easy way for you to build wealth over a long period of time.
Yeah.
Over a long period of time. So all if I'm going to wrap up, all I'm
Yeah.
going to say, if you want to get started with investing, the first thing, you need to educate yourself
Mm-hmm.
before parting ways with your money.
Yeah.
And the other thing that I also want to say is that you need to understand the business before getting into the business, either in stocks or in crypto or in any form of investment. A lot of people, they might be investing in crypto, I say crypto, in stocks, but they have not even considered crypto. This, even if it's just a small portion of your portfolio, because why? When you study what the big asset managers are doing, you see what they're leaning towards. Again, this is a game changer. I understand that crypto is very, 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 very volatile and risky. I'm going to put that out there. So don't think that you're going to make money in crypto within the next few weeks or few days. But again, these are some of the pillars for building wealth over time. So that's where I'm going to end today.
Yeah, I think for me, I haven't been investing in cryptos because I don't understand the crypto space. So I stick to what I understand. But
Which
I
is good.
think in conclusion, it's good to have your emergency fund.
Mhm.
If it means maybe getting a side hustle or another way to find extra income,
Yep.
I think that might be helpful. And once you have your emergency fund, educate yourself,
Yep.
understand where you're investing your money, and understand the businesses that you are intending to invest in.
Yep.
And if you think it's too complicated, I think there are different ways. I know some people who go to the bank and then they tell them this is my risk tolerant, and they can advise you and invest your money for you for a fee. And then there are some people who do the investment themselves, that is self-directed investing. So you just choose what is comfortable, what you're
For you.
comfortable with, because investing, it's your money. You can literally lose your money or make money. But also, I think it's also important to understand the taxes. I know in Canada, there
Hmm.
are different kind of accounts,
That you can take
they
advantage
can
of.
take advantage of them. So if you understand where to invest your money, you can optimize your returns, because taxes is more like it can reduce
Returns.
your actual return. So
Yeah.
I think for our first live, I'm so thankful for the people who joined. Thank you so much.
Thank
I
you.
don't see any questions there. So I'm going to just say thank you so much for your support. We really, really appreciate, and I wish you a very successful 2024 and
Yes.
beyond. And by the way, we will be doing this
Yes. More.
monthly
Yes.
commentary, all things equal, in 2024. So
Yes.
tune in and let us know what you think on the comments. And thank you so much.
Yes.
Okay,
Thank you.
thank you and bye.